As always, joining me now, Oxbow Advisors managing partner Ted Oakley, and joining the conversation all morning long, Fox News contributor Liz Peek and Michael Lee's strategy founder, Mike Lee. Ted, your thoughts on what you saw in the markets and what you see in the weeks and months ahead for stocks?
Well, you know, Dagan, I think you get these bounces in here. You know, we've gotten about a 7% bounce off the lows here a few weeks ago. We think that's probably over because, you know, if you look at this sort of tsunami coming together with, you know, basically he's going to have to break the economy to break the rates and also break the inflation level. So we think that'll weigh on the market over the next 6 months. And so it looks still fairly dire to us still.
Mike, jump in here. What did Jamie Dimon, what was the word that he used last week? A hurricane for the economy?
Yeah, not encouraging signs from Jamie Dimon. I agree with Ted that the only way to stop this inflation is to crush the economy, unfortunately. So Ted, my thoughts for you is I've owned a lot of energy this year, fortunately. What are you doing for clients? I'm looking to sell any technology or beta into these rallies. What are your thoughts? What are you doing for your clients?
Yeah. Well, we came into it about 7 or 8 months ago, you know, with quite a bit of cash, and we raised some cash actually in the early part of the year. We probably have more liquidity today than we've had in a couple of decades, actually. And one of the things we've done, we still own energy. We actually we've tapped it back a tad in the last month, but not much. But right now, we think the key to that is basically for us, preservation this year will beat the S&P, and that's where we are right now.
Liz Peek, jump in here.
Good morning, Ted. I think the big story that's evolving today and may over the next several weeks is the reopening of China, which is good news and also bad news, because as China gears up again, won't that drive oil prices higher? Couldn't it make inflation actually worse to have the world's second biggest economy now also looking for all the materials and supplies that are in short supply?
I think that's true, but I think the thing about it, it still all comes together so that oil, and energy prices, will drive us to a point to where that typically will drive us into the recession. And I think it all fits together right there. I think you have a great point, but it should really exacerbate what's already happening.
Ted, again, history is just horrible if you're looking at this economy. And I don't mean to laugh, but in terms of an oil price spike triggering the vast majority of past recessions, but also, as the Journal has pointed out repeatedly, in the past when the Federal Reserve has tried to take inflation down to that kind of 4% level, in the last 80 years, in every instance, the Federal Reserve caused a recession.
Well, and I think that's what will happen this time. I think that, Dagan, I think that's the only way out for them. I think if you look at it right now, they're really, really boxed in. They have a situation where the May numbers, which come out Friday, probably going to be just as bad or worse than April. And so, you know, they're typically looking backwards, and so they just keep the pressure on as the economy's slowing. That's the problem, and I think that's where they are right now.
Speaking, let's talk about oil really quickly and the oil stocks and where else you're socking money in this environment. Oil up this morning, Brent and crude both up more than 0.5%. Following Saudi Arabia raising prices, the national average for a gallon of gasoline hitting a new all-time high today, $4.86. Diesel at a new all-time high, $5.64 a gallon. That's why I've been so focused on the cost of diesel, Ted, over this, because we know that diesel is the fuel that moves the economy. It filters through anything that travels on a train, a truck, tractor, ship. All the farm production is based on diesel. But you were talking about energy stocks. How else, and the preservation of capital, where else do you invest in this environment?
Well, I think you want to try to find some income while you wait. And one of the things that we have now that we didn't have really in the last 8 or 9, 10 years is you have some decent returns on you know, a 12-month or 18-month treasury while you want to wait on something. And, you know, you get up over 2%, 2.5% or so on a 2-year. So what happens is you can do that. I think some other things, though, offer some interest for us. Obviously, the growth stock area for us, we own them, but we're not adding too much of that. But I think you can add, you know, the REITs are fairly inflation sensitive. You get some great yields there. We still own the gas pipelines. We get some great yield there. And I think, you know, certain companies can, if they get cheap enough, we'll buy them. We're not necessarily against it, but it's hard right now, Dagan, to say that there's 7 or 8 areas you want to go into right now. I just think liquidity right now probably should be a major holding for you.
That was everything that everybody was asking me when I was not in New York City but down south over the weekend, is where can you get any safe income in this environment? And finally, savers are getting a little bit of a break, being able to sock some money into treasuries. But beyond that, income can be dangerous if you're looking maybe at junk. Junk doesn't do well if the economy's heading to a recession.
So true. I think people don't realize, but junk actually trades with stocks. You want to buy junk when the stocks are at their lows, and you want to sell it when stocks are at their highs, because let's face it, it's right there with it in terms of risk.
Ted, great to see you this morning. Thank you so much for being here always. Ted Oakley.
Thanks, Dagan.